All right. We're officially live. I have Pat White, the CEO of Bitwave. I'm really excited to chat more in detail. Pat, to just kind of kick off the conversation, you want to just give a rundown of who you are and what you're building?
Absolutely. Thank you again so much for having me. This should be super fun. We will have a lot to talk about. My name is Pat White. I'm the CEO of Bitwave. Bitwave, we are a 3-year-old company in the crypto space now, which I feel like we're like grand. It's a crypto, like there's like a dog years conversion there. It's like I haven't decided what it is, but it's somewhere above 7, but below like 25. So like somewhere in that range. We're like, a 40-year-old person at this point in the crypto space. And we are, we started the business. I've been in crypto forever. I love crypto. It's like one of my absolute passions. And then I also am really deep in enterprise software. And so I worked at Microsoft and Cisco and Intuit and a few other companies like that. And so I was sort of waiting, and I'm sure we'll talk about this a lot, but I was waiting until businesses started getting serious about crypto to do a startup in the space. So I've done a few startups. There was one which was a really, really good idea, terrible execution, called Spark Spaces, where we basically, it was Slack, but 5 years before Slack was around. That should have been a great one, but just never got the bat off the shoulder. Worked on a startup called Synata that was enterprise search for the cloud. So that was really cool, and we ended up selling that to Cisco. And then sort of did a little bit of consulting and ended up striking onto this idea about how businesses will use crypto and what that all looks like. Bitwave as a business, we focus exclusively on kind of one postulate, which is, how do we enable digital assets for enterprises? Like that's the only thing we wake up for every single day. That's the only question we ask ourselves every single day. And of course, like where that started, or like the very beginning of that, is like tax and accounting, because no business can really use crypto seriously. And I say business, obviously you have like us, like guys like us that got into crypto. We just do it. We don't care what the regulators say. We don't care about other stuff. It doesn't matter. That's not who I'm really thinking about. We're talking about like, if General Mills like is going to start doing, General Mills decides one day that they want to start including, a token with the Lucky Charms. Like, what is it going to, like, that's going to happen one of these days. Like one of these days there will be a leprechaun NFT that comes from General Mills. And like, what is the decision process that General Mills is going to go through to actually make that happen? And that's like what I end up being kind of passionate about. I was like, look, there's going to be a ton of like I's to dot and T's to cross that will get them from like, what the hell is an NFT, all the way through including it with on a QR code inside of a Lucky Charms box. And that's the kind of stuff that we think about. So the beginning of that, of course, is accounting, tax, how you handle all those things, how you go from the blockchain into your general ledger, how you recognize all these really complicated transactions and all that. But then moving on, it's more just like, well, okay, now we have all these like, these variations of Lucky Charm NFT. How do we treasury those? How do we track it? How do we make sure that one of our developers doesn't steal a bunch the night before we launch and then sell them on, OpenSea, the NFT black market, or whatever the hell that is. Like, and so it's sort of thinking very holistically about what it looks like for businesses to get into this stuff. And that's sort of what we do.
And where are you guys now in terms of progress? Are you working with General Mills, or have they launched their?
That's the dream, right? It's super interesting. So we have over 65 customers. We're, I'd say the leading solution in market. We work with a handful of Fortune 500 companies. So that's sort of the really interesting part, is like there's like basically, a handful of those companies that are starting to dip their toes in. And, over the next year, we really think that's going to explode, obviously. But for us, like our focus has been up to this point, we've sunk our teeth into the crypto natives. So great, customers of ours that we're so proud of are like Dash, like L1s like Dash, L2s like Optimisms, NFT platforms like Artblocks or Stoner Cats, big companies like Bit Digital or Core Scientific or Greenwich, who are publicly traded miners. Up and down the stack, it's people who really need to have good accounting practices and want to be in crypto. Those tend to be our bread and butter today. But then our focus kind of going forward, like we are super excited about when the big enterprises are getting into this stuff.
So is it true that you think about Bitwave as launching these kind of verticalized product lines where the first thing is accounting? You say, hey, we're just going to run your accounting start to finish, as much as you want, and it's really a services arm. And the second would be, hey, you don't know anything about NFTs, you want to get into it. So there's like a strategic
Strategic.
coaching. Yeah, I
Yeah.
think I heard that from somewhere. Maybe it's a word. And there's a guidance practice, so it's like helping them figure out what to do. Am I thinking about this the right way? That there's kind of these checkpoints along the road from start to finish.
Well, Bitwave is first and foremost a product company. So before anything, we have a product that you can go and sign up for that lets you, do your, as a business, do your tax and accounting for digital assets. You can go, you add your wallets, all that kind of stuff. We don't actually do any of the accounting ourselves. We work with a lot of partners on that. And it's actually, it's a super interesting topic of conversation. I mean, for people who like this stuff, and if you're listening to this podcast, I'm sure you like this stuff. Like, no one agrees on anything. No one agrees on anything at all in this space. And when I say that, I mean it from like a regulatory compliance, accounting, tax perspective, no one agrees on anything. And so in fact, we've sort of carved a niche out for ourselves in some ways because we are super flexible. Like if you have someone that comes to us and says, Pat, we have taken the tax position. I'll give you some of the interesting tax things that are floating around in the world right now, for instance. ETH to WETH, is that a trade or not? It's like a really simple question. It's so stupid. And I feel like a lot of us, like just on its face value, we're like, dude, shut the hell up. Of course, that's not a trade. That's me wrapping my ETH, like move on with your life. But, you talk to different people and they take very strong stances on that. So they say, no. When you go from ETH to WETH, that is in fact a trade because you are substantially changing the nature of the product. One is this token contract, one is this token contract. That's different. You need to treat that as a trade. Other people say it's not.
And this is specifically WETH being wrapped Ethereum.
Yeah, wrapped Ethereum, exactly. Yep.
So and the reason you take a stance, or you can take the stance that it's not a trade because it's not a different currency. It's just a
we can from the product perspective, we basically built the product that we can take both stances because we have some really conservative customers who work with really conservative big four accounting firms who have chosen to say, absolutely, that is a trade. You need to take the most conservative stance possible. But then other people will say, oh no, that's like the intention is all that matters. That's definitely not. But then those same people might look at something like BTC to wrap Bitcoin. So like, this is sort of a fun one from like a technical perspective because ETH to WETH is all on the same blockchain. It's all controlled by that WETH v9 contract. That's like everyone in the world has audited. If WETH were to break, Ethereum would be broken. Like WETH would not break before Ethereum breaks. So at that point, no one cares about restating their taxes from 2 years ago because of WETH taxes. That's totally different. Like Bitcoin to wrap Bitcoin or like Bitcoin to Ren BTC. Ren BTC it's a cool project, but fundamentally it's still 6 dudes who control like $120 million worth of BTC on like these hardware devices. And so when you ask the question of that, like, well, when I go from BTC to Ren BTC, is that a trade? A lot of people say like, yes, absolutely, because there's a huge counterparty risk there. It is not it's not smart contract enforced. You're crossing boundaries of like blockchains, and so that's not a trade. And so that is a trade. So you need to do different treatment. So that's like we went really, really deep on something, but it's kind of a fun thing to think about because it shows like even stuff that's very self-evident to us, like ETH to WETH. When you step back and you have someone who's been doing, public accounting for 20, 30, 40 years, and you're asking them to look at this stuff, it still is very mind-blowing. I mean, it's very, very mind-blowing for a lot of people, and they're still trying to get their heads wrapped around it, so they have to make decisions like that. So we're long answer, we're first and foremost a product company, and then we do tend to do some consulting stuff with businesses trying to like get them up to speed because that's how we see the world sort of shaking out.
Yeah. And what are larger companies now currently thinking the opportunity is? I'm sure this varies across different companies, but is it generally, hey, we're just going to mint a coin and then have some governance over that, and or are they thinking more sophisticated or trying to integrate, or just are they looking for problems to solve, so to speak?
Great. That was a great question because it's up and down the stack. And it really, essentially what you can do is you can kind of think about the company and then think about what they're, because a lot of the companies we talk to, think about like Microsoft is not one of our customers. So Apple and Microsoft are not customers of ours. So I will speculate freely on what they do without having to worry about NDAs. you think about something like Microsoft, just at a very abstract level, there are smart people there. They are going to be looking at NFTs, like for Xbox. So they're going to be looking at NFTs for Xbox and how you can do a monetized marketplace around NFTs, how you can incorporate them into your avatar profile. There's a rumor that Microsoft holds a bunch of Bitcoin because they buy 0-day exploits on the dark web. So they'll go out and they'll pay Bitcoin. The rumor goes, I don't know if it's true or not, but the rumor goes that they will go and pay Bitcoin to hackers on the dark web for 0-day Windows exports. There's a rumor that Apple bought $5 billion of Bitcoin just because, Apple has more money than God. So hell else are they going to do? Like they can, if they want to diversify $5 billion, it's literally, it wouldn't even show up on their balance sheet. There's a rumor that they did some diversification there.
And this is not stuff that could be looked up publicly. I mean, when they report their earnings, it wouldn't show on there.
It depends on how they held it. Apple has a lot of different subsidiaries and has a lot of different structures that they could use to kind of hold a big diversified position. And they could also be going into ETFs. There's other mechanisms to get into it to get exposure for kind of inventory, for that mechanism. But when I think about Apple, and I think about Apple or GE or some of those types of companies, that when they're going to be using crypto, they're not going to be thinking about paying people per se. They might. Apple, there was a period where the Apple payments was rumored to be all run on Ripple. I don't think that was true, and I think that they did a deal, but I think it fell through. There was some variation of what was happening, but the original thing for Apple Pay was going to be over a blockchain. I don't think that's where it ended up. But think about Apple. They have one of the most complex supply chains in the entire world. Crypto overlaid with supply chain is just a match made in heaven for a lot of these guys. So you think about blockchain in general. I know we don't when us that are in the space don't tend to talk about blockchain in the abstract anymore. That was sort of the 2017, blockchain is going to change the world. Now DeFi is going to change the world, or NFTs, all that kind of stuff. We don't tend to think about blockchain anymore, but blockchain has blockchain's first killer use case was crypto. That's an amazing use case. Blockchain has another use case, which is supply chain. And the reason that blockchain works really well for crypto is it's when you have a problem where you have to get a lot of people to agree on a set of data that don't really like each other that much or don't know each other. That's why crypto is an amazing use for blockchain. That exact same thing works for supply chain. So all the people are the shippers, the customs agents, Saudi Arabia, Aramco, all these people in America's government that don't really like each other, that all have to agree on a set of data and then kind of take that to fruition for customs laws and import taxes and duties and all that. That's going to be an amazing place. When we really overlay crypto on top of the supply chain, blockchain stuff happening, where as soon as a particular iPhone crosses customs and gets approved, that immediately releases funds out of a smart contract to a supplier in Vietnam, which releases funds out of a smart contract to their supplier in China. And this idea of cascading around across different sort of broachable topics, that's the stuff that people are really getting excited about. So we all get really caught up on the day-to-day Twitter sphere around NFTs and things like that, but there is real money to be made and real optimizations and efficiencies to be found for businesses around this stuff that we aren't even thinking about yet. Honestly.
Yeah. That use case has been brought up. I've certainly heard it before, and I generally have the hunch that there's been a over promising, under delivering on the enterprise blockchain opportunities, generally speaking. I'm curious if you agree with that. It may just be a lag. It may just be, hey, we thought there was going to be, blockchain all over the place, and then that just didn't pan out, and maybe it will. But
you're totally right. No. IBM wasted $100 million on this. IBM wasted literally $100 million building an entire team, going all in on Hyperledger, and then realizing that, oh wait, a database blockchain is not that doesn't no one wants that. What they want is this stuff built on public blockchains. They want to be tied to cryptocurrencies. So what happened early on in the space, I don't little history lesson if anyone's interested, is that all of those guys, IBM's a great example, were incredibly nervous about all the regulatory aspects of this. So they went super deep into blockchain because they thought, oh no, businesses won't be able to use this stuff because of the regulatory lack of clarity around what is a token, what is security, all that kind of stuff. So they all went super deep into blockchain, saying like, hey, we'll get the same benefits, but we'll do it in a regulatory nice way. That's not like, you can't get the benefits from that. Like there is no benefit if you use a custom blockchain like Hyperledger, and then you still have to push to your accounting group to send a payment over to someone else. Like, you haven't gained anything. Like,
Yeah,
nothing is
right.
made better by
You've
that.
lost something. You've just made it more complicated.
You've just added complexity to the system. Like this stuff all comes to fruition as people are now really getting serious about public blockchains and tying together like the smart contracts with real payments on top of it. So yeah, no, I think that a lot of the guys who got in this early just made a really strategic mistake because they were so conservative. It was like these guys always do this. Like they hedge their bets. They're like, oh, we want to do this, but we got to be conservative, and you just can't do that.
Yeah, yeah, exactly. You can't adopt a new system, but then secretly keep the old one.
Half-ass into it.
Yeah, it's a good point. Are there chain protocols now, or even companies now that are clearly establishing themselves as leaders in the space with examples of ways that they've integrated it or fully adopted it into their backend process and like made that meaningful shift?
You know what? I think so. Outside of the crypto native sphere, I'm not sure there are. I mean, within the crypto native sphere, the companies are grown up. I mean, it's one of those things, like, you look at the ICOs from 2017, 2018, those are like real big boy companies now. Like, they are not small companies, and they are adopting digital like they are hiring multiple layers of accounting managers and bringing in ERP systems that have support for advanced AR/AP processes. I mean, there are people who are incredibly sophisticated about how they are bringing digital assets onto their balance sheet, into their business processes, and that are managing $10 billion, $100 billion of digital assets, like, and in some cases, like, accidentally. Like, we literally have customers who did an ICO for, I don't know, say, $200 million or whatever, like some sort of small amount of change, that like wake up one day and they're like, oh crap, we have $5 billion on our balance sheet. Like, how did we even get, like, it's just this like crazy world. And so at that point, you have to become a real company, because you have a real fiduciary duty, and you have real people looking at you, and you have, 1,000 employees who all depend on you for livelihood. So crypto native companies are getting real serious about this stuff, and they're getting big, and they're getting serious, and they're doing a really good job at it. I don't think that any of I don't think that any of the Fortune 500 companies are very serious about this. They're all still hemming and hawing a little bit. But the goal, that's our goal, is we'll get them there.
Yeah. Do you feel like the attitude is maybe internally or pushed upon the bigger companies, one that is, hey, if you don't make this change, then you're going to lose out, you're going to lose market share? Or is it, hey, this is an opportunity to grow and expand and make our services better, or some combination of that?
That's the fight. That is the internal fight. You have guys that look like you and me who are in there being like, guys, what the hell are we doing? Like, I think about Blizzard, because again, Blizzard is another company that's not a customer of ours, so I'll speculate on them. But they are sitting on between $1 and $10 billion of digital assets with their World of Warcraft if they were to go to NFTize that. I mean, easy, like in a weekend. I mean, literally like 3 clicks of a button, and suddenly they have $1 billion of revenue in their bank. And so you look at coming at that, and that there's guys like you and me in there who are like, dude, what the hell are we doing? Like, why are we forgetting this? And then their CFO is probably has been in the space for a very, very long time, has been a public company CFO at many different companies, has been this forever, and he is scared absolutely. Yeah. He is scared out of his mind about this stuff and is completely unprepared for this. And you say something like, hey, we're going to NFTize, like, our armor and sell it. He's like, no, I don't know, no. Yeah. And then we're going to hold Ethereum on our balance sheet. Like, no.
Huh.
It's okay, guys.
What specifically do you think is the resistance? Is it being able to report the earnings in a way that they don't get sued, or is it loss of revenue somehow from just what you don't know what you don't know? Or
no, I
what is that CFO really scared of deep down?
There's 2 major things that come into play for the CFO. So the first one is that the CFO is governed by a directive from the board of directors, which, like, from their treasury, like, management committee, he gets a treasury management directive that tells him how he should be managing the treasury. And so what that generally say for most public companies, it will be your goal for our treasury is preservation of capital. So now it's like everything in the world is open to interpretation, but like if you are a more conservative CFO and someone says, hey, your goal is preservation of capital, and you look at you look at like Bitcoin, which over the course of the last week went from $50,000 to $67,000 to now $60,000 today, and you're like, no, well, my goal is preservation of capital. You actually are in a position where you really, per your board directive for your role, you cannot really do that. So that's certainly one of it. For the guys who are dedicated to the position and kind of take that position, they have to contend with that piece. The other side is just pure FOMO. I mean, or is pure kind of fear and misunderstanding. I mean, I think one of my favorite subreddits, I swear to God, is Buttcoin. Like, I love reading that because I don't agree with any of it.
Buttcoin?
Have you ever been on
that? No.
It's just it's a group of people that all hate Bitcoin. Like, they hate cryptocurrencies. They hate Bitcoin. They create memes around it. They just bag on it constantly, and I love it because it's just like it keeps me sharper because like I like to understand what people are looking at. Because I'm a true believer, but you like to question your own beliefs and you like to make sure that you believe in the right thing. And so they say things and I'm like, oh, that's really stupid. You know, then in my mind, here are the reasons that's not true. But it does, like, it shows you that there are large swaths of people who, no matter what happens, like no matter, you know, like take any of the various like points of time, like there's been all these amazing milestones. MicroStrategy buys $200 million of Bitcoin onto their balance sheet. Tesla starts taking it. JP Morgan, you know, Jamie Dimon decides that it's not a scam. I mean, all this stupid, but like there's all these like great little points in time where you're like, dude, like if you were reasonable, at one of these points in time, you've been like, oh, okay, maybe this isn't complete BS. And yet they've just like held on. Like they're this Titanicing along with it. Or whatever the opposite.
I kind of think of it like on either end of the spectrum, there's going to be people who look at the quantitative aspects, the reality of what's going on, and just negate that. And just say, I believe Bitcoin will never be useful. It's a giant scam. Or people on the other side that will hold it till they die. I mean, they will starve before they sell Bitcoin, and in hopes, you know, that one day it goes up higher than they bought it for. And I mean, that's kind of a natural distribution of where people lie. I do think that you're right, and if the bottleneck is the CFO at a large company who is stereotypically a conservative person, they're just
100%.
Purely by their profession, but also by their directives, and those people are who the people internally put pressure on to make the change. They're not likely doing a ton of technical work themselves, but they have to account for the change. If he says yes, like a CFO at a large company says, like pick Activision, they have to, what are they doing? Say, like, take the case of NFTs, because I think it's more nuanced and interesting in some ways than the case of just minting a token. Say Activision, which has digital assets, they have, you know, all these different accounts that people own.
Probably, like, without being, like, the two largest holders of digital assets in the world, in the way that we don't use it, is going to be Getty and Blizzard. I mean, are easily the two biggest owners of what are traditionally digital assets by far.
And Getty being the stock photo.
The stock photo, and like all of the photos of all their art, and just the like all the newspaper stuff from over the years and all of that.
That's interesting. So that's the two sort of categories.
I'd have to do like between AP and Getty. Like there's going to be someone like Blizzard that has like because theirs is just pure market cap. I mean, they're the swords on World of Warcraft, when you fair market value them off of like the black markets for those things, the gray markets are worth like a tremendous amount of money. Same with on like the actual assets that all of the combined assets of these companies that hold sort of like copyrights for different assets, which again also could be NFTs. I mean, that's a great place for NFTs to kind of come into play there. Yeah,
you could almost make an argument that anytime there's a black market for anything digital, that's like the perfect launch pad. That's like the that's where blockchains would thrive.
So but it's an interesting question, kind of what is the next steps there, and like how do they start thinking about this problem? And it's so interesting because I mean everything with crypto is just different. It's just one of those things, like everything is different. And I even like to say like crypto itself from an enterprise perspective is sort of the kind of rambunctious stepchild child of like credit cards and bank accounts, and then foreign currency and inventory. And that's, I won't get into too many details around there, but like one of the first problems you have is if you are going to actually have a lot of crypto at your enterprise, so the two places you sort of store a lot of assets in your enterprise are either bank accounts, which are, a big company. The biggest companies in the world might have like 1,000 or 1,500 bank accounts. Like Coca-Cola, across all of their subsidiaries around the world, might have 1,500 bank accounts. We have customers that have 10,000, 20,000 wallets, or like staking nodes, or whatever it is. And so you're already, and then we're in early days in all this stuff. You're already like super early on for that, and you're already way outpacing what the business. And at a company like Coke, they will have one person per bank account. Like they will have one person whose full-time job is to reconcile that particular bank account, at least, if not maybe more. So like you're looking at like 1,000 people to just do these bank accounts there. And now you have a situation like with us where we have customers with 10,000 wallets and 2 people trying to like handle all of that data and monitor it. So you have very much the process problems of like, gosh, what do you do at that data scale? How do you kind of manage it? But then you have this treasury management problem. It's like, look, if we have a developer who we have entrusted with coins, who's supposed to be deploying smart contracts or minting NFTs or testing new software, and he's trading them away for top shots and then gambling on Satoshi dice, and then one day just ups and peace out with his wallet. There is no Amex who's going to claw that back. Like there's no right. Social Security, there's no other mechanism to get that back. There's no one watching it for fraud. And so you as the business need to start picking up those functions. Like you as the business are responsible in a way that you've never been before for like individual financial activities. The same way it goes, like there's the other side of this, and we've had this happen at Bitwave. Like we had developer wallets where I was like just messing around, and one of our developers was like messing around. They traded for some stupid token, and then I like look like a month later, and we have like $20,000 in this wallet. I'm like, what, dude? Who the hell? Like, what happened here? Like, oh, I like bought like I bought Golem, or I bought YGG. I was just messing around. I don't know. Like, and you just end up. So the way you even approach like monitoring your business and your business activities and kind of centralizing it and making sure, and even then the next step, of course, is like, hey, let's say everyone's a good actor. You still have the problem that people they lose their wallets, they lose private keys. So you need to be running processes to make sure that they are backing up their private keys, that they're never holding more than $10,000. They're sweeping it away. Like there's all these new processes that have just never been a real thing that are now that people are like running headlong into, essentially.
Yeah,
and that's the first thing.
Yeah. I kind of distill that down to say the way the system currently pre blockchain is set up is that it's slower. There's more friction in the system. It involves more people, but you have more control. Like the concept of theft, you can't. Your developer's never going to just wire money to a bank account and then disappear with it. There's limitations sort of all across the way, and now that potential is gone. The potential to have all the friction, all the manual work is gone. But now you introduced the new problem, which is theft, right? Mistakes and theft. And then it's almost like taking the existing friction in the old system with people and delays and interoperability across banks and remittances across borders and saying, now we can create whatever we want. We can programmatically determine where you want the stopgaps to be, which is a lot of work. You have to, build a real meaningful product to create that customization. But when you set it up, you like you said, you may only need 2 people to manage something that you previously needed 1,000 people for. Is that an appealing? I mean, just that in and of itself. If I'm a company like Coca-Cola, and you tell me I could, replace 1,000 people with 2 people.
Yeah.
I mean, that has to be a primary driver.
And then the one I think about all the time. I mean, we talk about this all the time. A lot of our customers are using DeFi. Like we are unique because our platform has really, really good support for DeFi. And so a lot of our customers are using DeFi, and that there's a chicken and egg there, which is like we support DeFi so our customers can then use it. If we did not support DeFi, our customers probably wouldn't use it because you, as a business, have a fiduciary duty to know what you are doing. So going into liquidity pools, putting your money in compound, earning yields on it, things like that. I think about a world, and I like without being too in the clouds about being. I think about a world where because. Right now, there is a friction that is essentially there's a tax that is put on the world there's a very substantial tax put on the world that is the financial services tax. like Goldman Sachs, JP Morgan, these guys put a 3% to 5% tax on every function of the world all around that that essentially everyone has to pay. So like you're sitting here and you're a business, like take a really good example of convertible debts, like a bond, issuing a bond. Issuing a bond is 3 to 5% that you're going to pay JP Morgan for that in order to do that. But like, and arguably they are doing work, right? Like we're not going to say they're not doing anything, but like they're doing the same work over and over again. So it's not like they're doing novel work. They're doing pretty much the same thing where they're going to figure out the tranches, set up the legal documents, build the structure, and then issue the bond. They're going to argue that they're going to do some of the market making. They're going to sell the bond for you. But like, there's 3% where if you could get, if you're issuing $100 billion of the bonds, as a lot of companies do, that's $3 billion. Like that's a really good bonus at the end of the year if you're the CFO that says like, hey guys, we saved $3 billion that from our bond issuance because instead of going through JP Morgan, we went straight to the blockchain. And it's totally possible. Like one of our customers is crypto bonds, sync bonds. They're doing bonds on the blockchain. And it goes beyond just like the 3% tax that these like bloodsuckers have like brought to us as a society, but it also comes to access. Like no one at JP Morgan is to take my phone call. Like I'm a head of a 14-person company. Like what they're gonna like, Pat, we're so excited to have you on the phone. Tell us how we can help you. Like no, I can't get a person on the phone from JP Morgan. I can't issue a bond through them, but I could go out today and I could issue $5 million of bonds on the blockchain, and I could start servicing them and I could get money. Like it is really the financial self-empowerment. It's sort of the classic American argument, right? Like we tend to have more freedoms, but there's like downsides that come with those freedoms. There's like school shootings come along with with guns. Like all these things I tend to have, and that's the same that we're sort of talking about here. Is like you can go through this great financial self-empowerment where you suddenly cut 3% off your bond, your fees, you're saving all this money, you have more control, you can do things you couldn't previously do. But oh, by the way, you have to be you're more responsible for all of your funds and monitoring what your developers are doing and all that kind of stuff.
Interesting. In the case of the bonds, how would it work on chain? I mean, first, just remind me structurally what a bond is.
So a bond is you give me money now and then I pay it back over time. So it can be a smart contract. It's not even the most complicated smart contract in the entire world. Essentially it is you give me money, I give you a structure. I set up a smart contract structure where I'm going to deposit my bond ticket into that, my coupon into that. So let's say like you give me $1 million and I agree to pay you back $1,000 a month for the next 30 years. So that would be a not atypical kind of bond structure. What you would do is you give me $1 million. I would set the smart contract, tie it to your address. Every month I would go in and drop the total coupon that everyone would have access to at the beginning of the month. In a perfect world, you do a streaming bond. So every single block of that month, you get access to a little bit of your coupon payment until the very end. And sometime between there, I top it back up so that basically it's not really 30 years. It is 30 years worth of 6,000 blocks per day on the Ethereum blockchain that's then very gradually getting tapped down. And I almost like think about these things as like a dial, because like I'm going to put some money in there, and then it's slowly going to go from from my money to your money over the course of the month, and then I re-top it up. And so, and then of course, now with all these things, if I default on that, there's you're going to end up back in meat court to do sort of like to deal with that structure, but that's sort of like that's kind of the inevitable piece of this anyways. Like you think about the DAO, you think about different like hacks that have happened. We tend to deal with those in the like outside the metaverse. Like those, we haven't yet really found a smart contract thing that like just solves all the world's problems, gets rid of lawyers, gets rid of like that's just not a real thing. Like mistakes happen, problems happen. You still end up having to deal with them outside of that. But the actual efficiencies from all of that, no things getting mailed, no checks getting cashed, nothing happening. There's just a thing that I watch that gradually every week has a little bit more money. Every single 5 minutes has more money in it. And when I need it, I can sweep the money out, and it's my coupon payment. So
and your view is that the meat suit is inefficient. The meat court, so to speak, off chain is an inefficiency that's just a lag on what is possible in the future. So if you have a bond on chain, then you could say similar to if I put money in a DeFi or say I put it in like Nexo or Celsius, and
Yep.
these companies they'll take your money, they'll store it for you, just like a exchange, and then they'll pay you interest on the money that you have in the account. So it's similar to Compound, but it's centralized. It's a company that manages it and holds your money.
Yep.
That structurally it's very similar. I'm giving the money to somebody else, and I'm getting incrementally, investment checks over time.
Yep.
That's how do you think about those companies?
Well, I'd almost say like a little bit the opposite way, which is that I think that bankers are going to end up being completely superfluous. Like I think 20 years from now, JP Morgan doesn't exist. I don't know. Like JP Morgan will have their own blockchain, they do all this stuff, so they will exist if they're smart. A few of the banks will not. Like there will be a subset of the banks that just that are like, blockchain, like this is not real. Like I don't believe, like there will be a subset of banks that like one day wake up and are out of business, like almost accidentally.
How does I don't want to cut you off. Feel free to jump in on that. But how does the government look in particular their control of their revenue, their tax revenue, and then their control over the monetary supply? Like it feels the government is going to be very. Frankly, I'm kind of surprised that the U.S. government has been so open to crypto. I mean, they approve the Bitcoin ETF. They largely approve, crypto off the bat. I mean, they luckily took a stance on the internet that was very open and supportive, reactive instead of proactive with regulation. And maybe that's just part of the DNA because it was only 10, 20 years ago that happened. But when I look at it, when I look at the incentive system, the incentive structure, the government's control over the Federal Reserve and their ability to print money, it's the primary lever that they have. It's, in October 2021.
That in the military,
that in the military. You're right.
Yep. Yeah, it is a super interesting. I mean, America is a deeply hypocritical country. I mean, it's like I love this country. It's a great place to be. We've had our problems recently, but it is like we as a country are incredibly hypocritical about this kind of stuff. That we are both. It is a really interesting question because you would definitely think that, but the beauty is at the top levers of government, crypto has actually put this wedge in there that is in fact very, very difficult to kind of conceptualize.
Yeah.
And I like to say because essentially it is inevitable, like without being too Batman about it, or who said I'm inevitable? Without being like too bad, like crypto is going to happen whether the government wants it to or not. So you can say. You can take like a very like Democrat position, like a very like social liberal position on monetary control that says like, hey, we need to control this. It is the absolute wrong thing to do to allow any other sort of monetary funds. We need to have really tight control over you can say that we need to have the tight monitoring control, all of that. But at the end of the day, all the other like China, Europe, Africa, I mean, everyone else is working on this stuff. So America will always be this balancing act. America will always face itself this balancing act of like, okay, we need to maintain control. We need to sort of like protect ourselves as a country, but we need to stay competitive. And at the end of the day, like America, more than any other ideology, like America is capitalism. And so when you are really faced at the top levers of government with saying like, hey, do we allow money to be made? Or do we give up this particular industrial revolution to China or to Cuba or to Canada or someone else? It'll always, like the other side will always win. It'll always be like, hey, let's let the money win. So we're swinging back a little bit, like, Elizabeth Warren, things like that. We're kind of, the pendulum swinging back a little bit to put more control on it. But like, it'll be short-lived is my opinion. I mean, there's just, the opportunity is just so great. And we're figuring it out. I mean, like we as a country are figuring out how do you do taxes on it? How do you monitor it? How do you, penalize people for it?
Yeah.
The last thing I always add in these conversations is like, you have to remember, like crypto accounted for 0.3% of illegal activity last year, compared to, $100 billion of U.S. cash was used for illegal activity. U.S. cash is by far the single most illicitly used monetary instrument in the world by far, like far and away. And so, like, we end up as really like it's easy to say, "Oh, crypto is the problem," but like, no, like there is a lot. We need to rethink a lot of our financial systems around this kind of stuff to deal with corruption and crime.
Yeah, I agree with that. I think, especially on the last point. I mean, cash is easy to use. It's really hard to use when you're far away. Mailing cash is really inconvenient. Going cross border is really inconvenient. So it opens up just different avenues to do illegal activity. And illegal activity, you don't want 0% legal activity, because there's always a trade-off. When if you approach zero, that means you're sacrificing many innovative opportunities. You're stifling entrepreneurs who would start companies because they can't, because there'll be some percentage of people on the platform who use it. So I do think that you always have to keep in mind the balance and the trade-offs, and knowing that any sort of utopian or complete picture is likely going to have a massive hidden surprise in it. Almost every example of any decision we've made collectively as humans kind of has that repercussion.
Always.
Yeah, I think about the Federal Reserve a lot and how it looks, what it converges to when, say, crypto fully makes just take the cryptocurrency piece of it and put aside NFTs and all the other applications. But when crypto becomes fully integrated in the world in the way that fiat is today, for the last 100 years, really. You could make arguments that there was big changes when it went on the internet, but really even when it was gold backed up until the 70s, it had really this similar structural intent and in use. And crypto is going to have a similar convergence. And the Federal Reserve and the US dollar probably goes on chain, right? The government eventually says we're going to, have a government recognized US dollar. They
100%. Completely
get rid of cash, and there's no physical currency anymore. And what is the Federal Reserve at that point? It's a arbitrary digital currency minting machine controlled by.
You just described the Federal Reserve today. At the end
yeah.
Of the day, I don't know if you ever. There was someone did a great pod on. I forget who it was. It might have been. Planet Money did a pod on what happens during a stimulus, but essentially they went in and they sat with someone when someone loaned JP Morgan during the 2008 crisis $500 billion. And so they went in, they were expecting this to be crazy. They thought there'd be locks and nuclear, two people turning the keys and all that kind of stuff. And no, it was the dude they're like, oh yeah, so hey, my name's Joe. Yeah, this is the spreadsheet. I'll just type in 100 million there. All right, we're done. It's like, dude, what do you mean? This. That's the Fed is a digital asset minting company today, because all this stuff is just on spreadsheets and all that kind of stuff today.
Yeah.
So it's essentially no different. I think my general perspective of this is that I tried to stay a little bit out of the super deep discussion of gold reserve and Federal Reserve as a instrument of oppression and things like that. I tend to take a very pragmatic economics approach to this, which is that inflationary currencies are really good for countries. Every time we've had deflationary cycles for countries, people have died in large numbers. It is a very, 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 very bad thing. You want people spending money. You want this notion in the way we've structured our world today. And I like this structure. You want people striving for the next thing. You want people spending money. You want people creating companies and stuff like that. We don't all want to go to an agrarian society and live off the land and stuff like that. And
inflation, the idea of inflation being that your currency tomorrow, your money tomorrow is worth less than it is today. So you might as well spend it and then keep
You might as well either invest it or spend it. Don't just put it in your bank and leave it there. That's sort of why we as a society, pretty much everyone in the entire world, except I guess China, at least right now, has decided on a 2% inflation rate as a target rate. They try to really limit that. They try to be very controlling over that. They hit it, they don't, whatever. But there's a reason that you want to have inflation built into your currency. There's a reason that you and me want to have deflationary assets to invest in. We buy houses, we buy, art, we buy Bitcoin. Those are good things. We get, we as a crypto community, I think about this so much because I've been around since I was in Bitcoin for a long time, and I was around during the schism between Bitcoin and Bitcoin Cash. And I think about this a lot, which is this idea of people wanting things to be all things for all people. It is okay for Bitcoin to be a deflationary currency that is slow to move, that has 10-minute small blocks and costs $20 for a transfer. Like, that's okay. It's okay for that to be a use case. Just like it's okay for there to be a payment processing system like Dash that guarantees, like, really, really cheap, instant confirmation payments. Just like it's great to have something like Ethereum that's an inflationary structure, but is not tied to like payments, is tied to compute cycles. Like, it's good for us to have different use cases, and I would clump the US dollar in that. Like, it's good for there to be governmentally controlled dollars, so the government can spend it, the government can control monetary supply, the government can set up targets for 80% of the population to feel like they should be spending instead of storing, like holding. Like, that's okay, and you just want to keep that balance and like have the portfolio kind of diversified there, because there is a world where the US dollar goes to zero. There's a world where Bitcoin goes to zero and the US dollar stays where it is. I mean, like, both of those worlds exist, and they're probably, to be honest, they're probably about equal percentage chance at this point. Like, there's probably about an equal percent, like small chance that crypto goes to zero or that the dollar goes to zero.
Yeah.
They both would probably have us like, hunger gaming and like hunting humans for food and stuff. But like, besides that, it wouldn't be a fun world, but like that world probably exists.
Yeah, that's a really interesting perspective. I like it's refreshing in a way, because it's different than what many people tend to frame it as, which is that there's this, we're in a transition period, and then it's just going to be like a certain way, and then it's going to be like that for a long time. So there's this tension, this fight, the currencies are battling it out, who's going to win, like the concept of winning in the competitive framing is often put out there. And then is Bitcoin going to win, Ethereum, whoever, and it's kind of a false framing, right? It's like
100%.
Yeah, there's so many different use cases, and probably as the world gets more complex, it's just going to keep increasing. There'll be more use cases and more things to invest in, and more different ways that humans find value in the metaverse.
Oh yeah, like we want it. It's good. Like, I don't get it. It's what we were talking about this. Like, it was like, what are the unique ways that I think I view the world? And one of them is like, I really love all of the different projects. I like that they are different. I like that they smell different and look different and do different things. And I think that's a net good thing. And I don't think, like, Ethereum and Bitcoin do not compete. Bitcoin Cash and Bitcoin don't compete. That's what, like, getting back to like subreddits, the Bitcoin, I always follow the Bitcoin Cash subreddit, and those guys hate Bitcoin still, and it boggles my mind, because it's such a goddamn waste.
It reminds me, you know what it's like? It's like, you ever go to like Little Italy in New York, and all the restaurants are right next to each other, and they all compete with it. They literally compete with each other, because you go down, you're like, I want some Italian food, and you say, I don't want this one, I'll go right next door. But the reason you're there, the reason I got into crypto in the first place, so to speak, the reason I went to Little Italy is because there was many different options. So it's kind of that concept of like, we pool together, we're competitive, but because we pull together, we all win. We rise the tide collectively, and I think that's
a great example,
good framing.
Because you got the place that does the killer veal piccata, you got the place that does the killer lasagna, you got the place that does really killer pizza.
Yeah,
and like because you choose one or the other, it's not because of who's winning or who's losing. It is, oh no, today I want pizza, that's why I went there. Like, today I needed a worldwide supercomputer to be able to do smart contract calculations for bonds, so I'm using it with Ethereum. By the way, I also need to have a place to store my values, so that as inflation is going on, I'm holding on to a deflationary asset. Like, so I use Bitcoin.
It's so interesting. It's almost like this diversity, really. It's diversity of value offerings. Diversity is good, and when you overlap directly, when you say, and I'm sure you've talked to people who run companies that are directly competitive. It's like somebody asks you if you want to date your sister. It's like, it's too close. You're like, we have no business together. We can't partner with you. We do the exact same thing. And if some coins come out with the exact same value proposition on a coin, it's like, there's only going to be a couple in that space.
It's a great point, though, and something that drives me crazy about these communities is that, like, Bitcoin Cash, like, they bag on Bitcoin. This is like, I own a bunch of Bitcoin Cash because I owned Bitcoin during the fork. So, like, they bag on Bitcoin. They just released a big update to try to compete with Ethereum, and I never see them talking about Dash. Dash is being used day to day to parking in Venezuela. Like, dude, if I was Bitcoin Cash, I would be spending all my time optimizing and better user interfaces and like great, like, really like all these different things on how to do payments, because that is what they really want to lean in on. And I wouldn't care what Bitcoin was doing, because that's just not, like, fine, they did that sucks, we disagree with that philosophy, but like, we need to do payments. And so now, Facebook with Novi yesterday is going to come out and eat all their lunches. Like, all these guys spend all this time, futzing around trying to be everything to everyone. And if they just like really focus on, and someone had actually done an incredibly good payments network, like a la what Novi is releasing or like what PayPal done, that would have been one of the world's biggest platforms. And so it's one of those things, like, understand the problem that you're solving. Like, before you do anything else, this is, I won't spend a lot of time on startup theory, but like, before you do anything in a startup, like, rule number one is like, understand, the Latin know thyself, like, understand the problem you are solving very, very well. And it is tempting to like chase your tail. It's tempting, like, there's always shiny new objects, there's always new stuff, but there is a problem that people will ultimately pay you to solve, and you need to stay dead center focused on that until you own 100% of that market, and then go and do, like, that's Google. You own 100% of search, and then you can go, screw around with Google Mail, like, whatever. But like, stay laser focused on it. Don't go and do don't do smart contracts. Don't do all this stuff. Like own, when you own payments, when Bitcoin Cash owned remittances from America to Guatemala, that's when they should have like stopped worrying about it. And it's the best advice for startups. Like, my last startup was an enterprise search startup, and it was a really cool startup in general. We worked on some really cool stuff, and we had this great algorithm for how it all worked. But at the end of the day, it always was kind of looking for a problem, which is like, we were trying to solve a lot of different problems. We're like, we could solve the problem for knowledge workers where they try to collaborate on a document, or we could solve this problem for finding invoices. We could solve this. You're always trying to find the problem. You're trying to back into it, but like, the process of a startup is like identifying a really good problem that a lot of people will eventually have or have today, and then building like an amazing solution for that problem. And that's like all startups are. And it's easy to lose track. Crypto people, we don't tend to think about that, but that's what cryptocurrencies are. Like, they are solutions to problems, and you should be laser focused on that piece of it.
Yeah, and if the solution that if the problem you're trying to solve is make money for people, and you're building a cryptocurrency and you're trying to boom it up, and then that's a disaster. Which I feel like is a lot of them. The Shiba Inu coin, when I saw that come out, I was like, that one is, people buying that coin are just trying to make money and time it right.
Every day I look at the price of Doge, and I just scratch my head. I mean, Doge is still, it's 25 cents, right? Like,
yeah.
All right, cool.
Yeah. But Doge solves a problem though. Doge is the Bitcoin, Ethereum, Solana, USDT. All these coins are very serious. They're very like, CFO could approve all those, but then there has to be a clown in the room. There's got to be a joker in the play. And I think that's what Doge is, that's the gap in the market they fill.
Yep. 100%. I mean, it started as a joke. It was started as a joke, but they're like, this is stupid. Like, cryptocurrency is stupid. We're gonna start with it's just the doggy.
Yeah. It makes, you need it in the portfolio. It makes it complete.
100%. I should have bought a bunch back then.
Yeah. Oh man, is there anything that you're looking for, Pat, with Bitwave? Are you guys, you mentioned your team's about 12 people,
15 people
15.
Now, yeah.
You guys raised some money on a Series A, 8 million or so. Is that right?
Yep. That's exactly right. Yeah, we're hiring. We're hiring engineers. We're hiring salespeople. We're hiring accountants if people like do accounting work and all of that. So if you're looking for it, we're at bitwave.io or Bitwave platform on Twitter, where we are always hiring, always looking to talk to people. And of course, if you need tax and accounting work if you need a tax and accounting platform as a business, you know where to come. So bitwave.io.
Awesome. Well, Pat, thanks, man. I really enjoyed this conversation. It was fun.
Yeah, Mike.
High octane.
This was great, buddy.
All right, man. Have a great weekend.
All right. Thank you, sir.
Bye.